Today, we're going to be talking about tariffs. It seems like it's everyone's favorite word, especially Mr. Trump. We're going to go into what is actually going to happen because of these tariffs. Trump is trying to achieve two things, which I believe only one of those things are going to be achieved. And we're going to go into that and what the consequences and the impact, not just on the US, but everywhere else. Now, the first thing I need to describe is what is a tariff, very quickly. A tariff is basically a tax on importing goods from another country. So if the US puts tariffs on, for example, the UK, then when the goods are exported from the UK to the US, the company that is doing the importing, which is a US-based company, will have to pay a tax to the US government on those goods that are exported. But the cost will not sit where at the company level, because the company is just going to transfer that cost to the consumer. So the US consumers are going to see that increase of whatever it is, 10%, 20%. In China's case, 50%. That's a 50% increase in the price of that imported good. Now, why is Trump doing that? Before I go into that, just some basic trading economics. There was an era in the world where countries didn't really trade with each other. They produced everything within the country itself. That obviously has some advantages and disadvantages. The advantage is that you're self-reliant on yourself and you don't have much competition from other countries. The disadvantage is that you don't specialize in something because you cannot rely on other countries to provide goods and services that they're good at. You have to produce everything yourself, so you cannot create a specialization that allows you to create the best products that you export. Now, a very long time ago, there was very little trade. And then in the 21st century, the idea of globalization and slightly before that really came into force, whereby it pushed countries to specialize in something in a particular thing. Because when you specialize in something, you become very efficient at producing that thing. It costs you less and you create better quality products because that's what you're specializing in. And the reason why countries can start to specialize in something in the globalized world is because they don't have to produce everything. They can rely on other countries that are specializing in these other goods that they need to export those goods to that country. So what happens is that you have countries that are highly specialized in different products, supplying each other, which means there's less costs globally and there's better qualities globally because there's more competition. So only the best only the countries that have the right talent can produce those products in a cheap way, but at a high quality, in high quality. The opposite of that would be like North Korea, where it trades very little, if at all, with any other country. And so it has to produce everything within the country itself, but doesn't have the right talent to do so. It cannot specialize. So everything isn't done at a high quality level. It costs more. It takes more time to produce things because they're not specialized in anything. They're just kind of generic in everything. That's the extreme of what you have. Now, what Trump is trying to do here is he wants to do two things with those tariffs. He wants to decrease the value of the dollar and also increase investment in the US. The idea is that if we have a cheaper dollar, i.e. if the value of the dollar decreases compared to other currencies, it will be cheap. US assets will be cheaper to buy. Not just assets, but the goods that will be produced in the US, because they're in US dollar and the US dollar is going down, it will be cheaper for other countries to buy those goods in the future when tariffs are reduced. So the idea is reducing the value, the costs of US assets and US goods when it comes to foreign buyers and investors. And when you reduce when you create cheap assets, foreign investors will invest. They'll put their money in the US to grow the economy, to create manufacturing jobs, to invest in plant and machinery, which increases productivity in the US. That increases jobs in the US because there's more investment coming in, there's more manufacturing happening. And so you would, in his mind, see huge economic growth happening in the US. But it's not going to work out in that way. And before I explain that, I just want to also say that, when Trump came out and said, these are the tariffs that these other countries are applying on the US, and it's only fair for us to retaliate to those these are actually false numbers that he is showing when it comes to the tariffs applied by other countries. There's a lot of countries that barely have any import duties on the US, but on that list, it's showing as 40%, 50%. And the reason why this is happening is because Trump isn't considering just tariffs. He's considering the difference in currency between the dollar and other currencies. And he's also considering other barriers, not just tariffs, but like regulations. So if a country, the EU or something like that has a lot of regulations around how products need to be in order to be sold, because, for example, of safety regulation or health and medicine regulations, Trump is considering that these regulations are tariffs, and therefore he's just making up numbers about what these regulations would mean when it comes to if you translated them into tariffs. And then the tariffs that he's applying are not even related to any of these made up numbers of tariffs that are applied by other countries. When you look at the calculation that they shared, the tariffs that they apply are based on the difference between how much that country exports to the US and how much the US exports to that country. And if that country exports more to the US than the US exports to that country, then they will apply a tariff based on that amount and some other considerations. That's how he's playing the tariffs. And so economists are very surprised by the numbers that he's shown because they're actually not true at all. But the reason why this won't work is because, this, as we said, there's two ideas: to reduce the dollar, which we're already seeing, by the way, we're seeing the dollar going down. There are many reasons why the US dollar is going to go down, such as there's going to be less demand for US exports because countries are going to retaliate to the US, which means US goods and services are going to be, or goods are going to be more expensive because of those tariffs that those other countries are going to apply to the US. And therefore, there's going to be less demand for US goods, which means less demand for US dollars to pay for those goods. But here's the thing that doesn't make any sense. This idea that Trump wants to move and have investment go into the US so that US produces. That takes a lot of time. It takes a lot of time for plants to be created, for manufacturing to happen, for people to move operations to the US. It can take 5 years, it could take 10 years until you see the rewards of that investment, until those rewards materialize in the US. And while you're waiting for that period to happen, because even changing supply chains takes a long time. If you're in business, you know that. There's a lot of processes that need to kind of happen before any supply chain changes. It's never going to happen in the next 2-3 years. And the issue is, while we are waiting for that to happen, 5 years, 10 years time, goods are going to increase in price in the US immediately because of those tariffs, right? If you are having goods come from China, which are cheap, and therefore people can consume those goods, now some of those goods are increasing by 50% immediately, which is passed on to the consumer, right? So before, the US is able to manufacture those goods efficiently, cheaply for people, it's going to take a very long time for them to be efficient at that, to even produce that if they're not already producing it in that country, because it takes time for that investment to kind of materialize and create the factories and create all those things. So immediately, prices of goods are going to increase in the US. And not only that, US exports are going to be massively damaged because of two things. Number one, other countries are now retaliating to the US tariffs by imposing their own tariffs on US exports. So US goods are going to be more expensive now when they're exported to other countries, and other countries are going to try to rely on other countries to provide those goods instead of the US. Not in all cases, because in some cases they cannot find it anywhere else except the US. But at the same time, there is a feeling of war happening around the world because of what Trump is doing. And a lot of people are now deciding not to buy US goods because of this. Even if it's cheaper after applying the tariffs, people just don't want to buy US goods because of the chaos this is happening. Because don't forget, when Trump applies these tariffs on goods from other countries, he's kind of declaring war on these industries, and it's going to impact a lot of jobs all around the world. And people are going to react to that by being angry at the US and choosing not to send their money to the US to buy goods and services from there. So US exports are going to be massively damaged because one, they're going to be more expensive because of the tariffs applied by other countries. And two, the sentiment towards the US has changed and people are going to want to buy less US goods because of this trade war happening. So you've got two things happening. One, US exports are going down. Two, US imports prices are increasing. And that's going to squeeze a lot of people and squeeze a lot of businesses, whereby they're going to see less income happening, increased costs, decreased profits, and therefore a contraction in the economy in the US and in other countries too. And once you start to see a contraction in the economy whereby growth is really going down because the investments haven't really materialized yet of those investments that Trump's trying to attract in the US, you're going to be faced with a recession. And this recession is going to be very different to every other recession we have seen. And that's because the US cannot react in the same way it did to the last recession, which was by borrowing money. If you remember in 2008, when we had the financial crisis, the whole world reacted by borrowing a lot of money to stimulate the economy so that the impact of the recession is not really felt as much as if it was just left by its own goods naturally to end where it will end. That would have had huge amounts of job losses and destruction to the economy. But during that recession, the US was able to bail out a lot of companies, especially the banks, because they were over leveraged, i.e. they lent out too much money compared to the assets that they had. So they were actually underwater. And that's why it had to bail out. The banks had to borrow money and print money to be able to pay out and bail out those banks. And then you had COVID on top of that. Same thing happened. It had to bail out a lot of people, a lot of businesses. So the US is now about, the debt in the US is about 120% to the GDP. This has never really happened in peace times. This has happened in war times, but not in peace times. In the UK, for example, it's about 100% of, just below 100%, the debt to the GDP ratio. Now, if those countries start to borrow more to start to stimulate the economy in a recession, interest rates will be much higher than they would normally be in previous recessions because the borrowing is so high. And if they want to borrow more, lenders will want to charge a higher interest because it's riskier to lend to those governments now because they're already highly in debt. And so there's a risk of default because of the level of debt they're in. So they're going to charge higher interest, and it's going to be extremely expensive to actually borrow that money. So they're not going to borrow that money. What they're going to do instead is they're going to start to print more money into the economy because that's the only solution, it seems like, that the federal bank has in response to recessions or depressions. Because Trump, even though the Fed is independent from the government, Trump has always indicated the Fed should reduce interest rates, stimulate the economy, print more money. So that's what's going to happen. And if you print more money now, the impact is two things. Inflation is going to be a lot higher because of that increase of money going into the system. If there's more money going after the same amount of goods in the system, that's going to increase the prices of those goods, right? And two, it's going to decrease the value of the dollar because there's just more dollars in the system. And so the value of the dollars decreases. Now, the value of a dollar decreasing can be a good thing to a certain extent because, as we said, it's cheaper to buy US assets if the dollar is decreasing. But if you believe the dollar is going to decrease more and more because there's going to be more and more printing to get out of this recession, your investments are going to be worth much less over time. And so you start to question whether you're going to be whether it's a good idea to invest in the US. And so investment in the US is going to reduce because they're thinking, if I invest now, the value of my dollar, which is when they invest is going to be turned into dollars, is going to be going down. And so I'm going to get a lower return on my investment because of that decrease in the dollar. And inflation is going to increase prices for everyone involved. And when that happens, when you've got a recession, you've got a cheaper dollar, you've got a dollar that's going to continue to decrease because of money printing. And you've got high inflation. This is an extremely painful position to be in. And remember, this is all happening at a time when we haven't even seen the rewards of that investment occur because, moving manufacturing, as we said, and plants to the US takes 5 years, 10 years to happen. So the impact is going to be job losses because companies are going to have less income, as we said, because exporting to other countries is going to be reduced because they're retaliating. There's a sentiment towards not buying U.S. goods anymore. Inflation is going up. Costs are increasing. One, because of the imported goods are now more expensive because of the tariffs that the U.S. applies, but also because money printing is happening as a reaction to the recession, which increases the price of goods and assets in the U.S. There's a squeeze happening, and it's going to be a whole destruction of the system, especially if you start to see the government try to borrow more and defaults start to happen within companies because they are not being able to pay the interest on those debt because their incomes have reduced massively. This could easily result in a financial crisis like we saw before, where banks can go under because they've let out too much and they're not getting the interest from companies because those companies are not receiving the income they were expecting. And so it can kind of cascade into banks not lending to each other because they don't know who's actually underwater, like what we call a credit crunch, which is what actually happened in 2008 and 9. And there's reduced trust in the system. Now, people think that, whoa, you're coming to a big conclusion here of a recession and a financial crash from just these tariffs. But the issue is this recession, if some people say when it occurs, is going to be very different just because of how in debt the government is and how in debt companies are. They over-leverage themselves, and they're not going to be able to pay that debt. The U.S. government just can't continuously borrow more money because if that increases the borrowing, interest rates of those borrowings will really increase, and it becomes a situation whereby the government will not be able to pay off its debt because now it's borrowing money to pay the high interest on that debt. And once you reach to that situation, you could really spiral into a disaster for the government. And the only way out of it for the government would be to print more money to create inflation to reduce the value of the debt in that situation. That, for me, is what is going to happen in this economy if we don't take a step back and reduce those tariffs. Trump is obviously taking a big gamble, and if the government wasn't in debt and the economies were doing really well, that gamble would make sense because I think that there could be some benefits from, obviously increasing jobs in the U.S. and increasing manufacturing and increasing investment. But Trump is taking that gamble at a time that is extremely dangerous just because of how in debt everyone is, how the government is in debt. The U.S. deficit is $2 trillion a year. That's how much it's spending more than it's earning. The U.S. debt is $36 trillion in debt. It's a very different time to any other time that we've seen how we operate in the economy. And this is not just a U.S. problem. This is a problem all across the world in terms of being in debt. So it's going to be interesting how this plays out. Would love to hear your thoughts about whether you think this is a good thing or a bad thing. And if you did like this video, do like and follow or subscribe. Have an awesome day.